What's up, traders? It's Chris here. So in today's trading video, I want to talk with you and kind of do an intro on understanding volume and how to use it to find good trade opportunities and find out whether breakouts are legitimate or are they more likely to be false break. Hey, is this trend likely to continue or is it more likely to reverse? Volume is a super important indicator that can give you information on whether those scenarios are going to play out and thus improve your trade profitability and probability. Now, this is kind of a newer topic for people who are used to trading FX because volume, you really don't get accurate volume data when you're trading in FX. And that's because Forex trading goes through decentralized exchanges and therefore volume is not going through a central exchange. And so therefore it's not available. So volume is something that's kind of new to FX traders, but a lot of my FX traders are now trying stock trading. They're adding stock trading as a component to their trading asset classes, and they're wondering, hey, how do I use volume? I don't have any experience in this. So we're going to talk about it in today's video. So volume, you can get it very easily in TradingView. You just simply go to indicators and you just type in volume, hit it, and bam, there it is. So that is the volume data, basically. The way I have it color coded is that I have it color coded on bearish bars. When there's bearish volume, it's one color, and when it's bullish, it's another color. It's dark blue. So volume represents, it's a type of flow data. There are four types of information that you can make trading decisions on. The first one is technical, such as price action in the charts, or maybe you use indicators like Bollinger Bands or something like that. Those are technical forms of data and information that you can use to make trading decisions. The second one is fundamental. So that would be like macro data, GDP, stock earnings, EPS, all these things. Those are fundamental types of data that you can make a trading decision on. Third is sentiment. So that would be like COT traders, if you want to know what's going on with trader sentiment, or you can even look at option calls and puts. That's a way of getting an idea of what's going on with sentiment in terms of traders. The fourth one is flow data. And flow data, because as we talked in Forex, it's a decentralized market, there isn't an aggregate volume or volume data out there. So there's no flow data on how much volume is going through the market. But the stock markets are working through centralized exchanges. So they have to share that volume data in terms of how many shares are being sold, how much. That all is available. So flow data is available for stock traders when it's not for FX traders. And that gives traders an advantage when trading stocks, because now you have an additional piece of data that's giving you insights into whether people are buying and selling, how much they're buying and selling. If there's a lot of volume, that tells us a lot of confidence on the institutional side and the big players that they're putting a lot of money into the market. And if the volumes are petering out, then that tells you that there's less confidence, less order flow in the market. The larger players are less likely to be active in that. And thus it changes the technical picture of what's going on. So volume is a super useful piece of information in terms of trading as a whole. And that's one of the things I love about stock trading is that you have flow data available to you, and volume is a super important component of that. So I'm going to give you some very basic ideas on how you can understand volume. We'll eventually do more advanced videos on this, but just to kind of introduce you to it and show you how it works. So we know that we have this volume here, and this is kind of something I've talked about before, but with the S&P 500, we have here, this is a weekly chart, so each candle is a weekly chart. And look what happens when the coronavirus really starts to hit the financial markets and financial markets start to really price in, oh my gosh, this is a legitimate thing. This is global. It's going to spread. It's going to start affecting economies. Not only do you get a big move in the price action in the candle here, but the volume data just shoots up tremendously. I mean, if you look at the average volume data is right around these little bars, and this more than doubles. So that tells you that there was a lot of trading activity going on that day. The fact that the volume more than doubled in one particular week, that week was very, very active for the financial markets. And oftentimes, high volume moves can predict breakouts to the upside or the downside. And so when you combine that with price action context, and you're reading a price action real time, if you have good supportive volume data to go with it, it can increase the probabilities that that breakout is legitimate, and it did here. Now, what you'll notice is that the volume really strong in this first week, and then it stays pretty strong the next 3 weeks. But then look what happens as the market starts to bounce. The volume gets lower and lower and lower and lower each week. And we only have one more day in this week's done. So even if the volume gets back up to here, it's still pretty weak. Volume has been declining for 3-4 weeks in a row. Now, if volume is declining, does that tell you that a lot of institutions are buying this rally? No, because if they were, the volume numbers would be going up or at least maintaining a certain strength. But we're not seeing that. And so now we're starting to get an insight into the order flow. The market is rallying, but volume's going down. It's not a broad-based participation, and it's not institutions. So what's the more likely scenario then? Well, if you think it through, if market's rallying and volume's declining, then there's probably some profit taking from people who were short. So when you profit take, volume and order flow tends to go down because you're not getting back in the market, you're getting out of the market. So that decreases volume and order flow. Also, if people are short covering, like maybe they were short, maybe they kept shorting, think it was going to go on further, and then they realize, oh, this isn't working out. So they're also exiting their positions as well. It's not people buying to get in massive amounts with increasing volume. Now the market's rallying on decreasing volume. And that kind of gives me an idea of what's going on in the order flow behind the market, and thus can give me good ideas for trading opportunities. So this is a really good example of how instead of just relying upon the price action, we can use the flow data, particularly in volume, to kind of make more informed trading decisions in terms of whether we want to be buying this rally or not, or how do we want to trade it. Contrast this to, let's take a look at American Airlines or Delta, a couple stocks I've been picking on lately, and I'm short. And what's the difference? Over the last several weeks, when the market was rallying, volume has been steadily increasing and the price action is not bouncing off the bottom. So price action is hugging the lows and volume is increasing or staying the same. That tells me that the institutional order flow is more likely pushing into this market and potentially looking for a downside break. And so if the market was kind of hitting the bottom and starting to bounce and we start to see increasing volume, then I think the market might be turning around, at least on this particular stock, American Airlines. But we're not seeing that. It continues to press onto the lows and volume is increasing or holding, and that informs me that the more likely probability is to the downside, or at least to stay on these lows here. So now we can see how volume starts to give us more information about making trading decisions. You can also see how it helps you with kind of breakouts. So let's take a look at a couple breakouts. Amazon was a big gainer today, and let's take a look at a smaller time frame chart here. We're going to look at the 5-minute chart. And so here we are for the 16th. So right here is the market open. The market gaps on the open, and you can see that volume was pretty subdued yesterday. But then as soon as we get to today, boom, volume's already spiked up. So it's almost double yesterday's volume, and the market's gapping up. And so that might indicate, hey, this thing might be running. And so this could be offering me a nice long trader to get long for a day trading opportunity because the volume is really strong. I mean, look at these volume bars. Look at this. This is where the volume bars are consistently. Compare that to here, while the volume bars are super low. That tells me low participation. So if any sort of breakout happened, I might be more inclined to fade that breakout, potential false break, because the volume and order flow really isn't supportive of the market continuing. Here, the market's almost double. And so that tells me that, hey, there's more likely that this breakout is going to continue and thus give me a greater probability towards the upside in trading that, more information to trade that to support my trade. So this is a really good example of how it worked out to the upside. One to the downside, Las Vegas Sands opened today with a massive bear candle. Here's yesterday, and then here's today. Huge bear candle to sell off. This is this big candle to open the market. And what's happening? Volume is increasing. Compare it to yesterday, which is mostly around here, and the market opens with big volume, suggesting that, hey, this might actually legitimately sell off to the downside. Sells off, and then it forms this interesting corrective structure. And look what happens during this period. Volume starts to taper off, and it gets pretty low. And this is during the opening part of the session, the first 2 hours, when volume is usually at its highest. So volume starts to dip, but then look what happens once it breaks out. Volume is here, and then boom, we get a big breakout, and volume increases all the way to the bottom there. So if you're wondering, hey, whether this breakout is legitimate and should I be trading this or is it a false break, we can use volume to inform our trades, give us more information as to what's going on in the order flow behind the market, and use that to inform our trading decisions and make better trades. That's pretty much it for this video. I hope you found it useful. If you did, make sure to smash the like button there. We really appreciate that. That communicates to YouTube, hey, we like this content, we like this video, please helps support this channel grow, and then YouTube rewards us by making our videos more visible and getting us more, kind of exposure to other people. It allows us to continue doing free videos, so we really appreciate it. Smash the like button, comment below what you learned about it and what you liked about it, and if you haven't already, subscribe to our channel as well. So with that being said, please leave your comments in below. I'd like to know what you learned about volume in terms of trading this, and whether you think it'd be useful to help you make better trading decisions. And if you'd like to see more videos like this, then make sure to let us know in the comments section. Otherwise, stay positive, stay green, stay persistent out there. There's a lot of great trading opportunities, and I'll see you in the next video.